Okay, so digital is a big part of the story, Brian. How much of this boost is idiosyncratic to Nike versus just this big overall digital push across retailers and exercise in particular?
Well, look, I think it's a great question, and I think it's a combination. And what I've been telling our clients is what really encourages me here with Nike. Here's a company that over the past several years has made significant investment to boost their digital capabilities. The COVID crisis happens, and Nike is able to withstand these headwinds extraordinarily well because of the investments they made. Now, clearly, we're seeing this dynamic elsewhere in the consumer economy. But look, I think Nike, this is a testament to the improved digital capabilities of Nike and how they can better connect with their core consumers through digital means.
And John, pretty recently, I think it was the fall of last year, Nike came out and said that they were no longer going to sell their products on Amazon in particular. So is this an example of a direct-to-consumer play that works in internet or with regard to consumer internet? And how do you think this example can be extrapolated to other retailers that are looking to make the same pivot?
Yeah, sure. I think, e-com up 83% shows you that the digital transformation here that John Donahoe and Matt Friend have communicated to investors since they joined is taking hold. The digital gross margin from their direct business is 10 percentage points higher than that of their wholesale partners like Amazon, where they sell to them on a wholesale basis. So they're calling undifferentiated retail partners, and those partners are being called in favor of key strategic partners, differentiated partners. But the focus here is on Nike's digital, directly operated business, the economics of that business. And as they go more direct and as digital becomes 50% of sales versus 30% of sales now, you're going to get a massive inflection in sales and EBIT profit.
Hey, Brian, with Nike, I always think to Shoe Dog, the great memoir by Phil Knight, and he was asked a long time ago about the appeal of China as a market. And his answer was, well, there are 2 billion feet. Basically, you do the math. How much of that still makes sense if or when U.S.-China relations truly break down, if that ever does happen? How much insulation is there?
Well, look, I think China is clearly a big focus for them. And if we looking through the results that were reported last night, China was, again, a bright spot for Nike, just given the overall relatively strong sales growth. I think what Nike has done really well here, and we've seen evidence of this for a while, is that Nike has really built in China what appears to be a rather local brand. So, and again, we'll see. Obviously, it's an extraordinarily fluid situation, the U.S. and China relations broadly. But in periods where, sort of say, relations were not as good, in recent periods, Nike outperformed or performed better than other American consumer brands in the market. So, again, I think the real key here is Nike's created in China what seems to be a local brand or perform like a local brand.